love the channel and find it useful in becoming a happy retiree. Subscribe today. My favorite topic today, and I think it's a tough time, first of all, for investors. After all, investing it's not about what happened over the last 5 and 10 years, which have been arguably unbelievably good. Even if you tie in what happened in 07 and 08, as bad as markets were, if you've participated in this market in the last decade, you're up over 7% per year on average. And we talked about how good it's been, even though we started over the last 10 years with one of the worst markets of all time since the Great Depression. So it's about what's happening over the next 5 to 10 years. Nobody cares about what happened. It's over. It's done. So here we sit at stock market highs, 23,000 on the Dow this week. Just blew through that like it was no big deal. So sure, it's been good. All-time highs, great. So what? What's the future look like? That's really what you care about, isn't it? So today we're going to talk about arguably the most important underlying topic when it comes to investing. Demographics. Oh, this is an exciting topic for me. It should be for you too. It's probably my favorite economic topic. And it's useful. And it's probably because it's useful, but it's useful in the sense that demographics, you probably heard this, is destiny. And in investing, I think of demographics as demand. Demographics is really demand, or it's the lack thereof of demand. Arguably, demographics, you could say hey, Wes, isn't it really about the supply of people in the world that can work and consume and produce? You can make that argument, but I think of in this economic equation, it's that supply of us that drives demand or not. So I think of the subject of demographics even more from a demand perspective. What will this population do, or what will it drive relative to that population, or this country or that country? What's this population going to drive relative to what's happened in history over the last 10 and 20 and 50 years? Do we have more people that need more of everything? Food and housing and furniture and cars and laptops and iPhones and healthcare. You name it. Or does an economy have a demand over time for food and housing, electronics and healthcare that's less and less and less? Is it shrinking? Probably not a very, very good place to invest. So demographics and the study of population trends can give us this important window into the future. It's the closest thing we have to a crystal ball. You and I both know there's no crystal ball in the stock market, particularly in the immediate term. But over time, if you can understand what economies are generally going to do, extremely helpful if you're an investor. So what countries are growing? What countries are shrinking? We're going to talk about how, for the most part, the average age, by the way, in the world it's growing, or we're getting older as a world. The whole globe is getting older. But what countries are getting older or old the fastest? To some extent, it might be bad news, but then in some respect, we're going to talk about a ratio called the mature to youth ratio, or the MI ratio, that actually helps with economies. And it talks about the average, the mature working segment of the population. The MI ratio is the mature to young ratio, M over Y. So these are really important metrics as investors that you got to understand. You got to understand the fundamental backdrop underpinnings of the economies that you're investing in. So it's such an important tool to understand where we're headed. What does this region look like over the next 10 and 20 and 30 years? And what that change in population might mean for their gross domestic product, for the stock market, for housing, for inflation. It touches all these major economic points. And that's why we're talking about it today. So I was sitting down with a family this week, and the wife said to me, Wes, here we are, we're sitting at these all-time highs, and it's pretty scary. I'm headed into retirement. I'm stopping work in like a couple months, so no more money's coming in. Is it still a good time to invest? Woo. Yeah, I get it. That's a scary question for anybody. And my answer to that, as you can imagine, and you've heard me probably say this, in the short run, over the next week or month, I don't know. It's impossible for anybody to give you a definitive answer over the short run. So the answer depends on time. She just stopped working, or just about to stop working let's call it age 60. She's got a lot more than a year left of investing. She may be stopping work, but arguably, or God willing, she's going to be retired by 30 or 40 years, 20, 30, 40 years. That's a long time to invest. And that's where the study of demographics can be so helpful. So the answer is I have a really good idea where things are headed over time, given time. So today, for this minute or the next week, of course, it may or may not be a good time to hop into the market 2 feet first, head first. But it's always a good time to be an investor. So if you own solid companies, growing businesses, the companies themselves are going to get even better and bigger, more earnings, which is what everybody cares about. That's what the market cares about over the next many years. That's what really matters. So what helps in this study? Again, demographics, the underlying, what's the underlying economic structure or backdrop or tide, if you will. Think of it as an ocean. What is the general tide of what's happening? Are we going to have a tailwind for this economy, or is it going to be a headwind? That's why it matters. Warren Buffett, he always goes back to this. And for all the Warren Buffett quotes I've read over the years, and I love read them, he has 50 amazing quotes. But one of them that doesn't seem to really get into the vernacular because it's almost just a fundamental belief of his is, and he says this or some form of this every time he gets pressed. So you hear Warren Buffett at extremes. Well, the market's terrible. Warren, do you think we should be investors today? Warren, the market's at an all-time high. Should we still be investors today? What he typically reverts back to is that if usually at the end of a conversation, if somebody's pressing it, well, it looks pretty scary. The markets are falling. We're at war. Economies are shrinking. Banks are in terrible shape. What does Warren Buffett typically go back to as his fundamental argument? He says, look, the pie gets bigger. And he's talking about the pie of economics, or the economic pie. And he's looking at what is it doing here in the United States and what's it doing around the world. What's happened over the last 200 years or 250 years, on average, has gotten bigger and bigger and bigger over the last 200 years. And along with that, the economies that have really participated or expanded in that story of the economic pie growing, stock markets have followed suit. So let's explore the next couple hundred years. Let's go 200 more years, just like Warren Buffett will want us to do. All right, maybe we're not going to do 200. We're going to go, let's say, over the next 20 and 30 years, because at least we have some ability to get accurate measurements about population growth, the change in ages. We know fertility rates, we know life expectancies, and we can understand what countries and regions are going to look like over the next couple of decades. So we have a good window into the demographic future. And oh yes, by the way, there is a lot of correlation between what the demographic of a society does, what the GDP of that society will do in following suit, and of course, what that means for markets. Because again, if we can have expansion of the economy, ultimately, or on average, that leads to companies having a better environment to sell more stuff to more people. Demand. There's more demand for them to serve. That's why the study of demographics, to me, is really the study of demand. So we're going to go out over the next couple decades and really take a look at what this looks like. Specifically, what does the U.S. look like along with all the other developed economies? And then, of course, the emerging economies. We'll even talk a little bit about the frontier or the emerging economies. They're not even counted yet as emerging economy because they haven't even gotten there yet. They still don't even have reliable cell phone service or reliable water. And those are the countries that are then become the next emerging markets, the countries that we know of today, like India and China and Russia, still emerging into a developed or mature economy like here in the United States or in Europe. Now, first of all, there's going to be let's talk about the history of demographics, how we've kind of grown, and the fact that we're actually at some point, demographers do see a peak statistically a peak in the number of people on the globe. So first of all, there's a lot of population growth ahead of us. That is the good news. There are about 130, and I've used this analogy in the past to try to give you some context about just how many people are coming into this world and leaving this world in any given day. There are about 130 million births per year. That's approximately 360,000 babies born every single day. The same study shows that there's 55 million deaths per year, so approximately 150,000 a day. Put that into context. Think of it this way. There are 7 football stadiums. Let's assume 50,000 people in a football stadium. There's 7 football stadiums of new people in this world born every single day, and about 3 football stadiums of people die every day around the world. So you can see that every single day we have this expansion of really the population. Now it's happening at different rates in different countries. It's happening much faster in some emerging markets, not all, than it is in the United States. And then it's happening here in the United States a lot faster than other countries. But it's estimated that the population growth will continue to slow, and this is the key here, over the next several decades. The growth has been slowing over the last several decades, really since the 70s. And the birth/death rates, well, it's been slowing even longer than that. I'm going to go into that history. So we can measure birth over death. And that's what demographers, to some extent, talk about when they talk about the replacement rate of people. What does that level look like in the year 2100? So let's go out we're talking about basically 80 years from now. Evidently, again, according to most demographic studies, that in the year 2100, about 80 years from now, that's when the replacement rate will level out and will effectively be kind of staying level as a total global population. Today, the world's about 7.4 billion people. We will be at about 11 billion people by the year 2100. And according to most research, that's when we kind of stop growing as a globe. Interesting. So I'm going to get into the weeds and into the numbers here, which this is just fascinating stuff to talk about as a family over dinner tonight. What's the future look like over time? We can't figure out the next week, obviously, or even year, but we have a good idea what the next 10 years looks like around the world and other countries, and how those countries are evolving or aging or getting younger. But for the majority of regions and countries around the world, we're getting older as a population. That's a function of 2 things. The function, first, that fertility rates have continued to drop. And it used to be that around the world, the average woman would have 5 kids. It's hard to even imagine that was the average. That has dropped precipitously down to closer around 2. So there's been an enormous and rapid change in the fertility rates around the world. We're having less and less kids per family. And there's a variety of reasons for that, but that is an economic or a demographic fact. Of course, longevity has continued to grow, and we've had a rapid rise in longevity. A lot of that has to do with improving infant mortality rates through the industrialized age with vaccines and just medical care and medical advances, and that's increased the average age. So we're getting older as a country or as a planet for those few reasons. What prompted the study of demographics, a couple of things here for Money Matters. One, we're at this market, a period of time that's a scary time for investors because markets keep hitting these all-time highs. I was in the office this week. The wife of a family I've been working with for a very long time said, "Hey, Wes, look, it's scary out there. I'm about to retire. Is it a, quote, good time to invest?" And that's a pretty common question in any environment. Is it a good time to invest when the Dow is at 9,000? Is it a good time to invest when the Dow is 23,000? There's always that question. What do the next 5 and 10 years look like? That's what we care about as investors. And it's harder to get your toe in the water or stay invested when things have already been really solid or really good. So the answer, of course, is that I don't know what the next week or month will entail. Yes, earnings are great. Yes, there's a lot of things happening that are positive in the economy. But even though the market over time doesn't care that much about politics, it cares about earnings, we could have a sell-off in this market if tax reform doesn't get passed. We know that tax reform And there was some movement on tax reform this week. Congress passed a budget resolution, and this paves the way for the potential for significant tax reform. If we don't get tax reform, we'll probably get tax cuts at least. Probably less impactful if they're just cuts as opposed to actual reform. But this happens on the corporate side alone. You're adding up $10 to earnings for the S&P 500. That's a big deal. What does that mean for me, Wes? Well, it probably means 15 to 20% upside for the stock market. The question is, though, is that already in this market? Has it already run an extra 10, 15% elevation higher because we think underlying that tax reform will get done? And if it doesn't get done, as Secretary Mnuchin said this week, if it doesn't get done, that could take some air out of this market. Because companies or analysts or investors are saying, hey, I'm going to add $8, $9, $10 of earnings to what is already $135 in earnings. That's a big number. $10 on that number is material. So it means that considering markets trade at 17 times earnings, 18 times earnings, let's say that stays the same, you've got a lot of some of this market rise. And I would say a big chunk of it in the last 6 months has to do with this still optimism that tax reform will get done. And if it doesn't, sure, we don't know what will happen in the next 3 to 6 months, but it's not going to be positive for the market. If it does get done, probably, and I know that there's talk about getting it done this year, not realistic, probably going to get done in the first quarter if something does get done. But is there a big jump if it gets done? I don't know if there's a huge jump because I think a lot of it is getting baked in. Yes, Predict It, which is a website that tries to handicap these political outcomes, only gives it about a 1/3 chance of getting done this year. I think the stock market or investors is giving it a higher chance than that. So these are all the things we have to think about in the short run, the short term. What over time really matters, not these short-term oscillations, potholes, iterations of the roller coaster. What really matters is the general direction. Is the economic pie, as Warren Buffett would say, is it getting bigger or not? And demographics really does a lot to answer that question. That's why we're talking about it today. One of my favorite subjects within the study of economics, demographics. So let's talk about the growth of the world over the past, well, let's go back a couple thousand years, or at least 1,000 years. In most of history, population growth has been super slow. It took about 1,000 years for the population to double. And this is back, at least we have some decent records from this. So the population doubled from 170 million people to 350 million people. That took about 1,000 years. So that's in the year 1200. In the year 1200, the population of the globe was about 350 million. It took 1,000 years for it to double. Then it took another 500 years for the population to double again. Another 500 years, we went from 350 million people to 700 million people in the early 1700s. So notice the trend here. 1,000 years to double, then it took 500 years to double. Then growth really ramped up with, of course, the industrialized world. And it only took about 150 years to double again. The population in 1868 hit 1.4 billion on the globe. So it went from 700 million to 1.4 billion. That took 150 years. So we doubled in 1,000, we doubled in 500, then we doubled in 150 years. So the pace and the speed of population growth was accelerating. Then it took less than 100 years to double again. 100 years later, so let's go from, it took less than 100 years. So in 1956, we had doubled again. We were at 2.84 billion, went from 1.4 to 2.8 billion people around the world. And then it took another only 40 years to double yet again. So we doubled. It took 1,000 years, it took 500 years, then it took 150 years, then it took 100. And then in the most recent double, it took less than 40 years to get to 5.6 billion people in the mid-1990s. But in the 1970s, the population growth, started to slow. Still growing population. It just the pace of change slowed down dramatically. So to get to another double in population this time, so we go from the mid-90s to get to, think of it this way, as 5.6 billion to get to 11 billion, another double. It's estimated that's not going to happen until the year 2100. So that would have taken, the next double is a 100-year process, considerably slower than the last double that only took 40 years. So the rate of growth, or the percentage growth, is dramatically slowing due to lower fertility rates. Less and less babies per person. In 2050, a little over 30 years from now, the world's population is estimated, and this is in general, I think this is good news. The world's population is estimated to grow by 28% from where we are today. Most of that growth, though, is from the emerging countries and the very, very least developed economies. We're going to have 44% growth from emerging markets. So think again, India, China, Russia, Brazil. Those are technically the emerging economies. But we're going to get from the frontier economies, think of sub-Saharan Africa. The frontier economies, 85% population growth. So dramatic expansion in the least developed economies, which, as you can imagine, not necessarily the best news for investors. Where the good news comes in is that the developed world is still seeing some expansion. In general, the developed world is going to see 3% population growth. Again, not a huge amount, but at least it's moving forward. Now you're immediately thinking to yourself, Wes, tell me about the U.S. What's happening here? What is happening in the United States? Well, this is, I think, a really good news. We are expected to grow between 20 and 25% in our population growth by the year 2025. That's a big number. We're going to be a quarter bigger in about 30 years from now. So that in general, on a larger scale, is good news for the U.S. economy. So let's talk about some other interesting demographic points. Japan, Singapore. They have the longest life expectancies right now in the world, about 85 years old for both of them. The life expectancy in the United States is about 80. Among all countries, this is pretty fascinating, husbands and wives, as you're listening, brothers and sisters. What's the difference between men and women? Well, among all countries, this is all countries, women outlast men. All countries on the globe, women outlast men. Pretty significant. And Sweden has the most narrow difference between the two, between men and women life expectancy. So it's about 4-year differential. In the US, it's about a 4.5-year differential. But in countries like Russia, and this could be blamed on really attribute this to lifestyle. Nothing against the Russians. But let's just say that if you measure rates of alcoholism, smoking, car accidents, workplace lack of safety. So when you see populations that have those trends that are more dominant for males versus females, you'll see an even bigger spread in life expectancy. In Russia, the life expectancy difference is 12 years. It's 12 years difference. Women on average last over a decade longer than men in the country of Russia. Okay, today let's talk about fertility rates. Today, the fertility rate around the world, this is on the globe, is 2.4 children per woman. In 1950, it was 5 per woman. 5 kids per woman around the globe. Today's replacement rate, so think of this as birth minus death, is 2.1. Today's replacement rate around the globe is 2.1. So by 2050, the replacement rate should fall and equal the fertility rate. So they will both be around the same. But population would still grow at the year 2050 up until the year 2100. We talked about that being a kind of a year where statistically or demographically it looks like the world will peak out in population. But the population continues to grow from 2050, even though the replacement rate and the fertility rate match each other. But because life expectancy will continue to go up or get better. You'll still see some population growth, and then we discussed it peaking out in the year 2100. So fertility rates will continue to decline, but life expectancy will continue to go up. The world's and again, what does that really mean for our economy, for most economies around the world? It means the population's getting older. The average age is getting older and older around the world. So for a lot of countries and economies, that's a good piece of this story. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.